Silver is priced in euro. Yes, this is the daily, and I've chosen to start a review of the precious metals in the last several days with this chart because I find that the pattern here is fairly clear, and I think that we are looking at the fourth wave actually in process. It may have found an end right here. I'll go to the 60 minutes, you'll see it even with clearer details. The idea is that as long as it stays above 17.5, the bulls are in command, the pattern is looking great, and it is projecting a reversal to back above 18.5 and higher. As you remember, I told you I think that the stock market in the US, in Europe, is likely to go for a correction the coming week, even the coming several weeks. If that is correct, that will open the door for a surge in the precious metals. In the circumstances here, that will be translated into a fifth leg and later on further strength. But let's examine now the 60 minutes. Now let's be very clear. What is absolutely critical, and you can see it is following more or less my arrows here. It stayed within this tight range, and it kept going for those ABCs. We have started right from here. We had an ABC, and then an ABC, and then an ABC, and then an ABC tiny, and another ABC. Okay, everything is looking on track for a perfect triangle here, as you can see, with an A, B, C, D, and that potentially the end. Okay, this is acceptable. Up to now, that's looking great. Now, what could puncture the whole idea is suddenly a break through that. If we do get a break come Monday, Tuesday, and the support at 17.5 doesn't hold, and it breaks in this manner, that's an alarm system ringing for the short-term traders in the precious metals. That's bad. That is change of plan. The market has something else in mind. We've got to be prepared to switch our perspective because such an event, especially if you see something like that, it breaks down. Look, it breaks through 17.5, it runs back up, and it doesn't manage to regain the support of the 17.5 level, and it comes down and it breaks through the first initial spot, yeah, on the first breakdown. That's where you want to sell short, believe it or not, or you definitely want to liquidate. If you're a short-term trader, okay, if you're a short-term trader, that is the point where you absolutely have no excuse to stay in. It is likely to continue lower. It is telling you it tried to regain the 17.5, didn't make it. Momentum is shifting down, and if that happens, we would have to review the price action and see what is the best wave count that could accommodate such development. Now, if it does follow the idea that this is indeed a fourth wave, what's going to happen? Monday, Tuesday, 17.5 is going to hold. Even if it continues, let's suppose it's not ready and it needs to continue to gyrate in this tight range here. It just bounces on the floor here. It bounces off and on and off like that. That's fine. This is still okay. That's a fourth wave, and when it's ready, it's going to zoom higher. Now here's silver. That's the weekly. That's silver versus the US dollars, and this is the long-term projection for an idealized path for this commodity. We have taken right from the bottom, December, January, we have taken this as 1-2. We're coming up in what we assume to still be a third wave. Okay, a third wave. It could, we have to stay open-minded. It could be that it is going to turn into a C, meaning that that is going to be an ABC, and that, of course, as you can imagine, will send silver way lower, possibly even to retest 14. Okay, we have to stay open-minded here. I already told you on a number of occasions, if you do manage to see here silver climbing above 21, riding to the zone of 21, 23 and staying here for several weeks, if not several months, that will be hugely bullish absolutely hugely bullish, because it will exclude the possibility that this can turn into an ABC. It will firmly put us on the bullish path that this is a 1, 2, 3, and that will be a fourth wave. And just the mere fact of having 5 legs up on the monthly or weekly, whatever you want, 5 legs up like that, that in itself would be epic message, because that will mean down the road in 1 or 2 years, silver is absolutely going to fly way above the current levels. Okay, so this is very long-term talk. What we have to be very careful observers here is, first of all, to see that our short-term 19 doesn't crack. Okay, 19, you can see from the chart here that this is very important. 19 cracks and it sinks under 18. That's bad news. That's bad news. For all you know, we could have witnessed an ABC failure. I mean, the C could have failed. Maybe the C actually ended here, and that will open the gate for silver to crash back to 14. And we want to know, we want to be prepared for this possibility. Okay, I am really reviewing the entire structure, the entire path for you, as the bull is likely to emerge, yes, to continue to strengthen here. And if it falters and we're going to have, if you like, an accident here, 19 breaks down, 18 breaks down, all the support is gone, then we know what is coming. This is coming, 14 is coming, and we are going to get ready for that. Now let's have a look at the daily. And this is the structure, reasonably clear. We have our 1, 2, okay, we have our 1, 2 here, we have our 3, and that's an ABC, gives us an A, that's an A, that's a B, that's a C, that's a D. It may have reached the end of this series of gyrations, yielding all these ABCs, and it's coming potentially to rest, meaning the fourth wave will find an end. It's possible it already found an end. If that is the case, Monday is going to be a bright day for silver. It's going to open up and start looking high. Now, as soon as it breaks above, it shoots about 2070 or so. You see this line right here. As soon as it shoots above this level, you got a signal. This is a preliminary signal, but it's something bullish, something very interesting. It is likely telling you that the triangle is behind us, the fourth wave is behind us, and we are going for that fifth leg that could resemble what you see here. So it's going to be quite a stretch. If it's not going to fail, it's going to be a full-scale run. It could be as much as 18 to more than $2 from current levels. So that should see it easily running above 21, reaching towards 22. You never know if it goes into an extension. Of course, it's going to be way more than $2, but beyond the run that is likely to last 2 or 3 weeks, if the fourth wave is done, beyond that, you already know that the very important structure is waiting for us for an inspection, whether we're going to land into a sideways price action or silver is going to come back and basically sink through 19 and head maybe a lot lower. Now here's gold, that's the daily, and again some review of the long-term potential here. I think we have seen here 1 or 1, that's 2. You don't see the labelings very clearly. I will open the chart again here and you will see that. The reason why I chose to show you the line style is because I think that the pattern, the fourth wave idea is coming through clearer here, and also it resolves the issue of the spikes that some would think that they can cause a problem in terms of the subdivisions here. A line style on a closed basis is netting out those spikes, and it appears fairly clear as far as I can see. We have our 1 or 1, that's 2, and that's 1, that's 2, that's 3. Gold has been busy in the last 6 weeks or so, basically delivering all the legs necessary to complete the fourth wave. Okay, it's really clear. There is not a lot of issue here to confuse us. That's a 1, 2, that's 3, 4. We are waiting for the fifth. Okay, now again, critical level for gold priced in US dollars. The first line is right here at 1310. That should be first line of alarm, of alert, if you like. If it breaks through that, that's not good. It breaks through 1300, that's really bad news. Bad news, it is almost certainly targeting 1200. Okay, now I will go to the 60 minutes and I'll flip to the usual candlesticks that I'm working with. So you can see clearly the development of all the legs of this. That's an A right here. Okay, starting from here, we have an ABC, we have an ABC, we have an ABC, another tiny ABC. You see where we are going. We have an A, B, C, D, and I think it is very likely to hang around here until the fourth wave is done. If it dips under 1330, it's not a signal. It's not anything bad. Okay, I do think breaking 1310 is a bad signal. Okay, that's bad for the bulls. That's sign of weakness, and for all you know, it could continue in its march and slide through 1300. That's a critical level. We definitely don't want to see it breaking through 1300. That will call for major reassessment of the wave count and will tilt the odds in favor of the bears. Okay, now if you are focused on gold and you would like to know at what point is it worth entering a position going long, if you trade the futures or leverage product, leverage ETF, etc., I would say watch carefully this level. Okay, it comes at 1367 or so right here. Once it clears this level, you're probably on your way to see the fifth leg developing nicely. It's got to, of course, clear eventually this level. It comes at 1375. But I would imagine already clearing 1367 is telling you that the fourth wave is behind you. I would imagine this is a pretty reasonably clear signal. And what should not happen, suppose you enter a position here, it cracks back and it breaks through 1330. That's not necessarily the end of the gyrations. You never know. I've seen many times that you work with a triangle, you think that's it, I've got it. That's it. I've got all the elements, A, B, C, D, E. It's ready. It's going to run. And then it runs back to the previous high. And then it comes back. And suddenly you find, oh, what it's doing? Oh, it's just prolonging the triangle. You know, we had this pattern, exactly this pattern, the development. We had it now in the EUROBUNDs. In the EUROBUND September contract, they've been doing exactly the same thing. So don't give up completely. But as I told you, once it breaks 1310, that's a more serious message. There you really want to pay attention. You have to calculate whether it is in your risk profile. Yeah, you have to check whether taking a position here and putting a stop loss that low is something you can live with or not. That's totally up to you. These are considerations that I can't comment in this video.